Our first tool for analysing a company is something called vertical and horizontal analysis, and it doesn't really take any accounting skill, just some basic maths. So vertical analysis goes down the page, and what we do is we express every number in an accounting report as a percentage of a base figure, and we usually do that as sales. So looking at an income statement, if sales were $80,000, less cost of goods sold of 35, that will give us a gross profit. We've got all our expenses and a total expenses and a final net profit of 15,000. Well, that's going to make it difficult to compare with this year versus last year, and also with other businesses. Other businesses are different sizes. Our business might have gotten bigger in the last year by double, but has our profit got bigger by double? So what we would be beneficial doing is expressing every number there as a percentage of sales. So for example, sales is obviously going to be the base figure, so that's 100% of itself. And then we can express the cost of goods sold as a percentage of sales. So if we do 35,000 divided by 80,000, that'll give us 43.8%. If we do the same with gross profit, we do 45,000 divided by 80,000, that's a percentage of 56.3. And likewise for all the other numbers, we can go through and calculate all those. And that's really good because it tells us we can now compare over different years and different figures where all our expenses are going, and also whether our gross profit's doing well compared to the previous year. Good way to express that is with charts. So we need to be able to interpret and analyze charts in Year 12 accounting. So perhaps you could get a pie chart which shows each of these slices as a percentage of the sales dollar. Horizontal analysis is where you take your vertical analysis and look at it over several years. So for example, there's the financial report, the income statement for 2013, 14 and 15. And just taking one number for example, we can look at, say, sales. It's gone from 80,000 to 90 to 75, and just looking at it as a number it is useful, as in our sales are actually lower than they were 2 years ago, but that is a little bit limited because what we want to factor in is, well, maybe we sold less, but maybe we made a higher profit doing so. So what we can do is use our vertical analysis for each year. So for 2013, we can express cost of goods sold as a percentage of sales. We can do the same for 2014 and 2015. And that provides a really good comparison because now we can see that in 2013, cost of goods sold was 43.8% of sales, and now it's only 40%. So clearly we've done a better job at either marking up stock or buying from a cheaper supplier. That's flowed through to our gross profit, which has improved from 56% to 60%. And then if we do the same with all our expenses and our total expenses, we can actually get a really good comparison and see we have shed over 10% of expenses in 3 years. From 2013, it's gone from 37.5% of sales were our total expenses, and now that's down to 27.7%. And looking at the main one, we can see that the interest is down from 5% to 0.4%. And even though we've managed to increase our profit, we haven't had to hire a whole more people to do it because our wages are actually less than they were as a percentage of sales. Looking at the net profit figure is probably the most useful. So we express that as a percentage of the sales. We can see this business has done over 100 or nearly 100% better than it was doing 3 years ago. And that's not necessarily borne out in the fact that sales actually went down. But when we look at it as firstly a vertical analysis for each year and then compare that horizontally, we can see that our performance is actually really good, and we can specifically see where we've done better. One way to do that is we might have to do the numbers ourselves. So all we do is we take the increase for each year by taking the new number divided by the old number. So $20,000 of wages in 2015, less wages of $15,000 in 2014. Advertising went down by 500, and rent went up by 8,000. And then as the percentage, we take the increase or decrease and divide it by the old figure. So in this case, we're going to take these variances and divide them by the 2014 number. So in that case, we'd take 5,000 and divide it by 15 would be 33%, and so on. So that's how we get those numbers, which now allow us to make that horizontal comparison.